Welcome to another episode of Deep Dive into Real Estate by Team Luddy Dillon. This is the place where we simplify real estate for you, one topic at a time. Enjoy.
All right, everyone, welcome back to another deep dive. Today we're talking all about mortgage pre-approvals.
Ooh, exciting.
It is exciting, but I feel like a lot of people think it's very simple. You get pre-approved, and then you're ready to go find a house.
Yeah, it seems like a pretty straightforward thing.
Right, and we're part of Laddie Dillon's real estate team, and Laddie's been in real estate for a while now, since 2007. And we just wanted to take this deep dive today to kind of highlight some of the things that maybe people don't know about mortgage pre-approvals.
Right, because getting that pre-approval doesn't necessarily mean you're ready to buy that dream house.
Yeah, it's more like maybe, like a pre-qualification for like a big race.
Okay, I like that.
You've pre-qualified, you can run in the race, but doesn't necessarily mean you're going to win.
Right, you could trip at the starting line or, hit a wall a mile in.
Yeah, exactly. So let's talk a little bit about like the basics of mortgage pre-approval, what it is, what people need to know, and why it's so important.
Sure. So, a mortgage pre-approval is basically when you go to a lender and they take a look at your finances, your income, your credit score, your debts, and they kind of give you an idea of how much you could potentially borrow for a mortgage.
Okay, so it's like a sneak peek.
Yeah, like a test run.
Yeah, test run into how much housing you can afford.
Exactly. And a lot of people seek it out because it gives them that kind of peace of mind,
Security.
Yeah, that sense of security. Like, okay, I've been pre-approved. I know how much I can afford. Let's go house hunting.
And I think also it helps when you're out there looking at houses and you're in a competitive market that you can go a seller, hey, I'm pre-approved. I'm ready to make an offer.
Yeah, it definitely gives you a leg up, especially in those hot markets where there are multiple offers. It shows the seller that you're serious.
Right, you're not just like browsing. You're ready to go.
You're ready to go.
Okay, so we kind of have that sense of what pre-approval is, what it means, but like I said, we're here to kind of dive into maybe the darker side of pre-approval, or maybe the things that people don't necessarily know or talk about.
Or because you'd think once you get pre-approved, you're good to go right. But unfortunately, it's not always that simple.
Yeah. Why is that?
Well, you see, a pre-approval is kind of like a snapshot in time. It's based on your financial situation at that specific moment. And as we all know, things can change.
Life happens. Right.
Life happens, exactly. Your job situation could change. Your credit score could fluctuate. You could suddenly take on a bunch of new debt. And all of those things can affect whether or not you actually get final approval for that mortgage.
Okay, so it's kind of like you're balanced on this, tightrope, and you get that pre-approval, and then all these things in life can kind of knock you off.
Yeah, it's a delicate balance for sure.
So let's break down some of those specific reasons why maybe you get pre-approved, but then something happens, and then that mortgage doesn't go through.
Okay, so let's start with one of the big ones. Employment changes.
Okay, everyone loves a good job change.
Right. New job, more money. What could be bad about that? But lenders actually get a little bit nervous when they see a job change, especially if it happens after you've been pre-approved.
So they want to see that you're stable, that you have consistent income.
Yeah, they like to see that consistency. They want to make sure that you're going to be able to make those mortgage payments month after month.
So if you're like, let's say you work in retail and you're switching to another retail job, it's probably not a big deal. But if you're going from, working in an office to being a musician.
Right. Or, going from a salaried position to something that's more commission-based.
Yeah. Or maybe freelancing or something like that.
Yeah. Those types of changes can definitely raise a red flag for lenders.
Okay. So employment changes are a big one. What else do we have to watch out for?
Well, your credit score is another biggie. And it's not enough to just meet the minimum credit score requirement for pre-approval. It's kind of like you got to keep it.
You got to maintain it.
Yeah.
Like the whole process.
Like a little bird.
Yeah. Like a little fragile bird.
Yeah. That you're nurturing and making sure it stays healthy.
Exactly, because even small fluctuations in your score can affect your final approval. If you suddenly rack up a bunch of credit card debt or miss a payment after you've been pre-approved, that could jeopardize the whole thing.
So no like celebratory spending sprees after you get pre-approved?
Definitely not the best idea. Wait till you have the keys in hand.
Good advice.
Yeah.
I like that. What else?
Well, let's talk about debt, because debt can be a sneaky little monster.
Oh, yes, it can.
You might think, okay, I got pre-approved for this much. I could totally afford a new car, or, maybe some new furniture for the new house.
Right, or even a vacation or something like that.
Yeah, but lenders, they look at your overall debt-to-income ratio, and if you take on a bunch of new debt after pre-approval, it can really throw things off balance. So it's like a teeter-totter. You think you're balanced, and then all of a sudden, you just put a big weight on one side.
Yeah, that's a great analogy.
You're off.
You're off.
Yeah. So really, like, after you get pre-approved, just try to, like, chill out on the spending. And
Yeah, just maintain the status quo.
yeah, exactly.
Yeah.
All right, so we've got employment changes, we've got credit scores, we've got debt. Are there any other big ones that we should be aware of?
Well, believe it or not, sometimes it's not even about you. Sometimes it's about the lender themselves.
Okay, explain that one.
So lender policies and those mortgage product guidelines, those can actually change after you've been pre-approved.
Really?
Yeah, maybe there's a shift in, debt to income requirements or insurance premiums go up and suddenly you no longer fit the criteria.
So it's kind of like the rules of the game are changing?
Yeah, it can feel that way.
Yeah, while you're playing.
And that's why it's so important to work with a good real estate professional, someone who's on top of all those changes. Someone like, Laddie Dillon, for example. He's been in the business for a while. He knows how to navigate those complexities.
And Laddie specializes in the Peel region, right?
That's right. Brampton, Caledon, Mississauga. He knows that market like the back of his hand.
So if you're thinking about buying or selling in Peel region, give Laddie a call at 905-598-0725. He's a great resource.
Absolutely. And he's always happy to chat and answer any questions you might have.
And one more thing about the property itself. Even if everything looks good on paper, the appraisal can sometimes throw a wrench in things.
Oh, yeah. The appraisal can definitely be a make it or break it moment.
So tell me about that. Why is the appraisal so important?
Well, basically, the appraisal is when a professional comes in and assesses the value of the property you want to buy. And sometimes that appraisal comes in lower than expected.
Lower than you thought or lower than the seller thought?
Lower than everyone thought. Yeah, and that can cause problems because it affects the loan-to-value ratio, and if the lender isn't comfortable with that ratio, they might deny your mortgage, even if you were pre-approved.
So even if, like, all your financials are good to go, the property itself can still cause a problem.
It absolutely can, and that's another reason why it's so important to have an experienced team on your side that can help you anticipate these potential issues and work through them.
So, okay, we've talked about a lot of reasons why, even if you get pre-approved, your mortgage might not actually go through, but let's not, focus on the negative. Let's talk about what you can do if you do hit one of these snags.
Right, because even if you face a mortgage denial, it's not the end of the world.
Okay, so how do we turn that frown upside down?
Well, we'll talk all about that in our next deep dive.
Stay tuned. Okay, so last time we were talking all about, how even though you get pre-approved for a mortgage, sometimes things happen and that mortgage falls through.
Life throws you a curveball.
It does. And, it's not a great feeling when that happens.
Yeah.
So today, we want to kind of shift gears and talk about what you can do. If you do hit one of these roadblocks, what are some steps you can take to get back on track?
Yeah, because like we said, a mortgage denial isn't the end of the world. It just means you need to adjust your game plan a little bit.
Okay, I like that. So let's talk strategy. What are some actionable things people can do to turn things around?
Well, first things first, you got to go back to the basics and look at your credit score.
The good old credit score.
Yeah, because if your credit score was a factor in that denial, improving it is going to be key.
So what can people do? Like, are there any quick fixes, or is it just kind of like a slow and steady wins the race kind of thing?
Well, there are no magic bullets, unfortunately, but there are definitely things you can do to boost your score over time.
Okay, give us the goods.
All right, so number one, make sure you're paying all your bills on time every single time.
On time, every time.
That's crucial because payment history is a huge part of your credit score.
It's like building trust with those lenders. Yeah. Right? You're showing them that you're responsible.
Exactly. And then another big one is credit utilization.
Credit utilization. What's that now?
So that's basically how much of your available credit you're actually using.
Okay.
So let's say you have a credit card with a $10,000 limit, but you only ever use about $2,000 of it. That means your credit utilization is 20%.
Okay.
And generally speaking, you want to keep that percentage as low as possible, ideally below 30%.
So it's not just about having credit available, it's about how much of it you're using.
Exactly. It shows lenders that you're not maxing out your cards and, living beyond your means.
Right, you're being responsible.
Exactly. And while we're on the topic of credit, You also want to make sure you check your credit report regularly for any errors.
Oh, good point.
Yeah, you'd be surprised how often mistakes pop up, and those can really drag down your score.
So it's like a little financial checkup.
Yeah, exactly. So make sure you go through it with a fine-tooth comb and dispute any inaccuracies you find.
Got it. Check your credit report, fix any errors, keep that utilization low, and pay those bills on time.
You got it.
Okay,
Yeah.
so that's all about credit. But we also talked about debt last time and how, sometimes even if you can afford that new car or whatever, it might still affect your mortgage approval.
Right, because lenders look at your overall debt-to-income ratio. So even if you can make the payments on that new car, it could still push you over the edge.
So what can people do about that? I mean, is it just like a matter of paying down debt as quickly as possible?
Well, there are definitely strategies you can use to tackle debt more effectively.
Okay, tell me more.
So one option is debt consolidation.
Debt consolidation. Sounds kind of scary.
It's actually not as bad as it sounds. Basically, you take out a new loan to pay off multiple high-interest debts like credit cards.
Okay.
This can simplify your payments and potentially lower your interest rates, which can help you pay down that debt faster.
So it's like streamlining your debt into one manageable payment.
Exactly. And then there are other methods like the snowball and avalanche methods.
Snowball and avalanche, those sound kind of fun.
They are kind of fun. With the snowball method. You focus on paying off your smallest debts first, regardless of interest rate.
Okay.
And that can give you a sense of momentum and motivation as you see those debts disappear one by one.
So quick wins for the snowball.
Exactly. And then with the avalanche method, you target the debts with the highest interest rates first,
Yeah.
which can save you money in the long run.
So snowball for motivation, avalanche for long-term savings. I like it.
There you go.
Okay, so we've talked about credit, we've talked about debt, but sometimes it's not just about managing what you owe, it's about boosting your income as well.
Right, because sometimes even if you're doing everything right to manage your debt, you might still be struggling to make ends meet.
So what are some ways people can increase their income without necessarily getting a whole new job?
Well, first of all, don't be afraid to negotiate a raise at your current job.
Always good advice.
Yeah, do your research, highlight your accomplishments, and make a strong case for why you deserve a higher salary.
You got to know your worth.
Exactly, and if a raise isn't in the cards right now, maybe consider seeking a promotion.
Okay.
Take on additional responsibilities, expand your skill set, show your employer that you're ready for that next step.
Make yourself indispensable.
Exactly, and then of course there's always the world of side hustles.
Ooh, side hustles. Tell me more.
Well, with the gig economy booming, there are tons of opportunities to earn extra income these days.
Yeah, you could be like an accountant by day and a dog walker by night.
Exactly. The key is to find something you enjoy and that fits into your schedule.
So whether it's freelancing or driving or selling stuff online, there are ways to make some extra cash.
Absolutely.
Okay, so we've got ways to improve credit, tackle debt, and boost income. Are there any other levers we can pull here? Well, what about the down payment? Does that play a role in all of this?
Oh, absolutely. A larger down payment can be a game changer.
Really? How so?
Well, it shows lenders that you're serious about buying a home and it reduces their risk.
Okay.
So if you can swing it, saving up that extra cash can really improve your chances of getting approved.
So saving is never a bad thing.
Never a bad thing.
All right, so we've got a lot of great strategies here, but what if you've tried all of these things and you're still having trouble getting approved? Are there any other options?
Well, there's one more thing we could talk about, but it's a bit of a tricky one.
Okay, lay it on me.
Co-signing.
Ooh, co-signing. Yeah, that's a big one.
It is if you have someone with good credit who's willing to vouch for you. It can increase your chances of approval, but it's not a decision to be taken lightly.
Right, because that person is essentially putting their own credit on the line.
Exactly. So it's really important to understand the risks and responsibilities involved for both parties.
Definitely not something to jump into without careful consideration.
Absolutely.
All right, so we've got a whole toolbox of strategies here to tackle a mortgage denial. But what about preventing a denial in the first place? Are there things people can do during that pre-approval process to avoid these pitfalls altogether?
That's a great question, and the key here is really to be proactive and informed.
Proactive and informed. I like that.
So once you've been pre-approved, resist the urge to make any big financial moves.
Okay.
Don't take on any new debt, whether it's a car or a student loan or even furniture financing. Just wait until after you've closed on the house.
So it's like a financial lockdown.
Exactly. No sudden movements.
I like it. What else?
Transparency is key. If you have any large deposits or withdrawals, make sure you have the documentation to explain them.
So no mystery money.
No mystery money lenders get suspicious of any unexplained activity, so keep everything above board and well documented.
Makes sense. And finally, even if you've sailed through that pre-approval process, don't let your guard down.
Right. Just because you've got that initial thumbs up doesn't mean you can coast to the finish line.
You got to keep those good financial habits going.
Exactly. Keep saving, make those loan payments on time, and just demonstrate that you're a responsible borrower.
And of course, working with a knowledgeable real estate professional can make all the difference.
Absolutely. They can help you navigate the complexities of the mortgage process and make sure you're staying on track.
All right, so we've covered a lot of ground today. But the main takeaway here is that even though pre-approval is a great starting point, it's not a guarantee.
Right. It's just the first step in a longer journey.
So be prepared for those bumps in the road. And remember, you've got the tools and resources to overcome them.
Exactly. And if you're in the Peel region and you're looking for expert guidance, Laddie Tillen and his team are here to help.
Absolutely. Give Laddie a call at 905-598-0725. He's a wealth of knowledge, and he's passionate about helping people achieve their real estate goals.
Okay, so we've talked about what pre-approval is and all the things that can go wrong and how to fix them.
Right. We've really covered a lot of ground.
Yeah, so I guess to kind of wrap things up, what is like the biggest takeaway that you want people to remember about pre-approval?
Well, I think the most important thing is to remember that pre-approval is not a guarantee.
It's not the finish line.
Exactly. It's more like the starting line.
Okay.
It's a great first step, but it's just one step in a longer journey.
So don't get complacent, right? Keep your eye on the prize and be prepared for those unexpected twists and turns along the way.
And remember, knowledge is power.
Absolutely. The more you know about the process, the better equipped you'll be to navigate it successfully.
So do your research, talk to the experts, and most importantly, don't be afraid to ask questions.
Exactly. There are no dumb questions when it comes to something as important as buying a home.
And speaking of experts, if you're in the Peel region and you're looking for someone who really knows their stuff, Laddie Ellen is the guy to call.
Absolutely. He's been helping people in Brampton, Caledon, and Mississauga for almost 2 decades.
So he knows the market inside and out.
He does, and he's passionate about helping people achieve their real estate dreams.
So give Laddie a call at 905-598-0725. You won't regret it.
He's a great resource, and he's always happy to chat.
All right, folks, that's it for another deep dive. We hope you found this information helpful and empowering.
And remember, no matter where you are in your home buying journey, you've got this.
Stay informed, stay proactive, and keep those real estate dreams alive.
We'll catch you next time on The Deep Dive.
Don't forget to subscribe to our channel. We will be back with something new and something interesting.